Countries around the world are struggling to keep up with the coronavirus pandemic. Global stock markets have had a turbulent week with some of the worst losses in over 30 years. So what's the economic fallout, and can a global recession be averted? This is Inside Story. Hello again, I'm James Bays. It's the world's biggest health emergency. The coronavirus outbreak is now a pandemic, and there are fears it could lead to a catastrophic global economic crisis. Sweeping containment measures have disrupted markets around the world, including the US. A travel ban on 26 European countries came into effect on Friday. And the unprecedented move sent stocks crashing to their worst losses in over 30 years. On Wall Street, the Dow Jones Industrial Average sank 10% on Thursday, its biggest plunge since the Black Monday crash of 1987, while European markets showed some signs of recovery on Friday. Throughout the week, global stock markets saw their steepest decline since the 2008 financial crisis, wiping out billions across the EU and Asia-Pacific. The airline, travel and hospitality industries are also expected to be hit the worst. And there's been a slowdown in manufacturing, particularly in China, where the outbreak originated. And the crisis has led to a weakened demand for oil, but it crashed further after a dispute between Saudi Arabia and Russia on prices and production. Well, let's bring in our guests to discuss this further. In Washington, D.C., we have Pedro Costa. He's a senior reporter at Market News International. Joining us on Skype from Brussels, Hosuke Lee Makiyama, director of the European Centre for International Political Economy. And here in our London studio with me, Gareth Leather, senior economist who specialises in Asian and emerging markets at the firm Capital Economics. Welcome to all of you. Gareth, a dreadful week on the markets. How bad would you say?
Oh, clearly it's devastating, the worst in a single day since Black Monday in 1987. And I think what it is, it's investors around the world waking up to the realisation of how bad this is going to be. In kind of January, February, I think there was a hope that it would be limited to China and maybe other parts of East Asia. But it's clear now that this is going to devastate economies in Europe and America, at least for the next couple of quarters, I suspect.
Pedro, we have had before a Black Monday, a Black Friday. Will this go down, do you think, in the history of the stock markets as the Black Thursday?
I think it absolutely will. And, while I wasn't around to cover the markets in 1987, I was around for the 2008 crisis. And I can tell you that this feels actually worse than that, if I can, if that is possible. And the reason for that is that when a crisis has a public health nature, there's no way for financial incentives like central bank intervention and government spending to put a floor under people's fears. So if people can't go out and spend money, the economy is going to come to a screeching halt. And I'm afraid that's what's likely to happen for much of the world this year.
In Brussels, Hosuke, tell us, what's your view on the historical perspective of this? 2008, 1987, how bad is this?
Well, it seems like every news article from Europe starts with a sentence that 2020 is the new 2008. But it seems that at least one person who doesn't agree with that is the chief of the European Central Bank, Christine Lagarde. I mean, we have seen relatively measured efforts so far with a few more bond purchases and a little bit of adjustment on lending rates. And we have actually seen quite a bit of recovery over the last day during the trading that we've seen today, with the markets going up as much as 7%. But unfortunately for Europe, this is just the beginning. We are now in the beginning of March, which is the equivalent of, if you look at the Wuhan developments, equivalent of where China was in the middle of January. We have only seen the beginning. And we need to bear in mind that Europe is extremely trade dependent, perhaps even more than China, and was facing a pretty gloomy prospect in terms of 2020 in GDP growth in the first place. So we haven't really seen the worst yet.
OK, I want to demystify some of the jargon, Gareth. People talk about a bear market, bears and bulls. I know this is quite basic for you, but for our viewers, what's a bear market mean?
Well, it's classed as a 20% fall in the stock market from peak to trough. And so for most stock markets around the world now, we're in that kind of territory. I think what's really unprecedented is the speed that we got there just in a matter of a couple of weeks. Normally it takes a bit longer than that. And I think it just shows the severity and the shock that people are having to wake up to of how quickly this is hitting places.
And also on that, Pedro, in terms of the US stock market, they had to actually stop trading. So-called circuit breaker system came into action. Just explain that one for us.
That's right. And it came into action on both sides, right? On the downside, on the selling, and when there were signs of hope, it actually was triggered on the upside. So there are basically three levels of circuit breakers, and they're intended to prevent market panics or at least to stem them. If the market sells off at 7%, there's a 15-minute halt to trading. If the market goes down 13%, I think there's I don't know the time period exactly. If the market actually fell for a full 20 percentage points, or a full 20% rather, in one day, it would just be halted altogether. Now, we haven't gotten to that stage, primarily because the other circuits kicked in before we could get there. So it's pretty bad, and it's fairly historic.
Well, obviously, the reason everyone will agree with is the coronavirus. But, of course, the timing of all this happening on Thursday came after that speech that took place on Wednesday night in the Oval Office, where the president always goes to try and speak to a nation at difficult times. He was trying to calm the markets, calm the American people, and yet it seems to have been this announcement that was most controversial.
After consulting with our top government health professionals, I have decided to take several strong but necessary actions to protect the health and well-being of all Americans. To keep new cases from entering our shores, we will be suspending all travel from Europe to the United States for the next 30 days.
Well, I saw one quote from Luca Paolini, chief strategist at Pictet Asset Management, who said that was the most expensive speech in history, Gareth. Your view on what Trump did? He certainly didn't calm the market.
No, he didn't. I think the problem is that, as everybody knows, that there's now lots of cases in the US of transmission between people, so it's not just coming in from abroad. And I think it's his failure to take that on board and to take more forceful measures to stop it in America rather than kind of trying to stop it from coming in from Europe. I think on the plus side, in America at least, a lot of the direction is going to come from state level. So already you've seen schools closed in a number of states. You've also had sports games cancelled. So at least action is being taken in America, if not from the Oval Office.
And on that specific, on stopping the travel, how worried are you about that specific in terms of the implications for global business and trade?
Well, normally I'd say it's quite significant. But if you look at passenger traffic on airlines, it's not quite ground to a halt, but it's slowed so sharply already that kind of that cutting these planes off now probably won't make that big a difference. I think it's more just the sign that he's portraying by this, that he's missed the boat in certain areas is more worrying.
Pedro, you're watching the markets, but you're there in Washington, D.C., taking the temperature of things. We've seen President Trump over the last couple of weeks. I think he had an eye on the markets and was trying to say, well, it's not really this serious, the coronavirus. He seems to have deeply misjudged things, didn't he, Pedro?
Well, Trump has himself literally aligned the success of his presidency with the stock market, saying the stock market is a barometer of his presidency. And so he does pay very close attention to the market. I think you could actually separate the sell-off into two legs. The first, as we discussed earlier, is just the general, the setting in of the uncertainty related to the pandemic. The second, though, which is what we're seeing in the last couple of days, is just panic at the leadership vacuum that people see in the United States. You know, there's the sense that nobody is in charge, and if the person at the top is in denial, it doesn't matter how much states are doing, how much localities are doing. There's a lack of federal level preparedness that's going to lead to Italy-style lockdowns, shortages of hospital beds, and these are things that we can prepare for now, and we know they're coming. So I think we should be very concerned, and the markets are too, obviously.
Hasuk, you're in an interesting position because you're a financial expert, but you're also a former senior diplomat, former representative of Sweden to the World Trade Organization. Certainly in Europe, it seems leaders have been potentially a little bit more upfront and more honest. Boris Johnson, the UK Prime Minister, this is the worst public health crisis in a generation. Chancellor Angela Merkel saying that there's a possibility 60 to 70% of the German population will be infected. In your view, do the markets respect honesty?
Well, in the short term, I think that the markets have first and foremost reacted to what the central banks have been doing. But I think what we have seen now is also perhaps more in the medium term, how the European leaders are preparing for an extended crisis of perhaps an unprecedented kind. And one thing that becomes very, very clear, which actually is a common denominator of perhaps both China and Europe and United States, is that when it comes to a crisis of this scale, there's very little contingency planning. It's not really about politics. It's really about civil contingency planning and emergency planning, where Europe is extremely poorly prepared. And in extension, also, we can see more structural issues rising because, as many people know, we are in a trade war or beginning of a trade war with the United States, with a number of key meetings that have now been cancelled between United States and Europe. Could also indicate that we are heading towards a very dangerous waters again. And just the fact that the United States actually imposed a travel ban on Europeans without actually consulting their European counterparts is something of an unprecedented diplomatic breach of etiquette.
I mentioned, Gareth, the comments from the UK Prime Minister Boris Johnson. He, in his Downing Street address, said that the UK, in his view, is about 4 weeks behind Italy, and we know how bad things are in Italy. And then there potentially are another 10 weeks to the peak. Well, if you're going up the curve, you've got to come back down again. That assumes there's another 14 weeks the other end. That takes us, I think, till the middle or end of September. This is going to go on a long time. Do you think the markets are ready for the length of potential length of this crisis?
It's hard to say what markets are thinking at the moment because they're so volatile, but certainly the sharp declines I think you've seen over the past week does recognise a change in the markets, that this is going to be for the long haul. It's not going to be over in a matter of a couple of weeks, that it's going to be months rather than weeks, and that we should prepare for some quite significant economic consequences in terms of companies potentially going bust and getting into big troubles, sharp rises in unemployment and so on.
At the very beginning of the week, President Trump was tweeting Saudi Arabia and Russia are arguing over the price and flow of oil. That and the fake news is the reason for the market drop. Pedro, on a normal week, we would be talking about that being a hugely significant financial story, and actually it's only a small piece of it now.
Absolutely. I mean, I think it certainly aggravated the initial sell-off, right? You had a severe downdraft from once the stock market hit peaks. There was a sell-off related to the coronavirus. The oil shock hit right in the middle of it, exacerbating those losses. And then, as I said, now you have the sense of a lack of direction at the top and actually a lack of ability to respond, right? Because as you said, this is going to be a very long-term issue. So there's no amount of economic stimulus that can. All we can do now is prevent the bottom from falling out rather than preventing the economy from slowing sharply. And to give you some visibility on the future, I know markets are volatile and it's hard to look ahead, but if you look at interest rate expectations, not only do markets expect the Fed to take rates again to zero next week, as it did in 2008, it expects the Fed to leave them there for the next 10 years. So essentially, the markets are pricing in the scenario where the United States becomes more like Europe and Japan, stuck in a low-growth, low-inflation environment for a prolonged period.
Just quickly on the oil aspect of this, do you see a threat to the shale gas industry in the United States now as a result of that element? And could that be another financial problem that we're going to face in the coming months?
The shale industry in the US has a kind of break-even point of about $40 a barrel. So I think oil prices would need to go quite a bit lower and stay there for a sustained period of time before you start to see major difficulties for those companies.
Pedro, your take?
I would tend to be a little less sanguine than that. There's already signs that the companies that are, the energy sector is extremely leveraged because it was just flush with cash from low interest rates. And so any significant change in the financial position of firms can leave them very close to insolvency. So I think, yes, you're going to see many bankruptcies in the energy sector, and not just in the energy sector. Look beyond that, right? The slowdown is going to affect event spaces, anything that is related to large crowds, shopping centers, malls, movie theaters. We're going to see large-scale bankruptcies around the country and around the world.
Well, I'd like to expand that. Hosuk, looking at the various industry sectors, where are your concerns? Perhaps we'll start with travel and tourism. How worried are you that airlines, in a matter of weeks, will be going under?
Well, I'm thinking we might be even looking at days, and we are also looking at perhaps massive bailouts unless, the governments are ready to throw them under the bus. But also from a bigger picture, I mean, first of all, the biggest concern is China. Even conservatively, we are looking at a haircut of 1% of GDP. China doesn't react to equity prices. The biggest problem is the GDP. They need to keep the entire economy and the machinery going. And China was already heading for a soft landing with a minus 1% projection on GDP this year. And we are now looking at perhaps even more than that. And which basically means that if China doesn't manage to grow more than 6%, we can have actually quite a bit of unrest, social unrest inside China. We have more than 100 million of seasonal workers in China who's looking for work and who cannot return to the factories. And once China is getting out of its own health crisis, Europe, their biggest market, isn't getting into theirs, which basically means that we are seeing a huge demand contraction in the international trade, which is going to affect China first and foremost. And second, we are also looking at the same kind of a shock coming to Europe as we come into a standstill. And as we heard before, Europe was already in a zombie market with low growth and low interest rates. And where we were hoping the euro area to recover even slightly, around 1.3% of GDP growth. I don't think that is even a feasible scenario because we don't really know when this is going to end. And as we said before, Europe has really poor coordination and contingency planning for a crisis of this kind.
Gareth, your view on looking at the various industries in the world. We've talked a bit about aviation, but where else are your real concerns?
Well, I think first and foremost, it's going to be tourism that's hit hardest. With passenger planes and airports just running dry, there's going to be very little tourism going on for the next few months at least. Retail sectors, sporting events, they'll all be hit hard as well. I think the key really now is for policymakers to step up and ensure that otherwise healthy companies can try and make it through this crisis. And so it's going to be difficult for them because they're going to be basically kind of relying on banks to carry on lending through this crisis. And there's no kind of legislation for that. So it's going to be kind of quite informal, but nudging commercial banks to keep lending so that these companies can get through.
Pedro, your view on that, particularly on the help that might be needed to small businesses. For example, if you are Starbucks, one assumes you've got quite a big bank balance. But if you're a single person running a coffee shop, you must now already be feeling the effects.
That's absolutely right. I think the layoffs are already beginning. We're seeing anecdotal evidence and stories, news articles about layoffs. It's the infrastructure for helping small businesses is kind of non-existent. We do have the SBA, but to disburse loans to, thousands, tens of thousands of small businesses on a regular basis in the United States would take kind of a financial infrastructure overhaul. I also want to not forget the families and individuals who are going to suffer. We're worried about the health of the firms. I'm really worried about the health of the humans. And I think that the primary thing right now is really to make sure that people have enough to get through their their bills, right? Because you talked about the small business owner who's freaking out. Well, what about the person who has a hard time paying their rent and now can't go to work in that small business, right? What about the gig economy workers? So I think the U.S. has a very poor social safety net, and we have to make sure that people can get through these 6 months without going personally bankrupt. Because guess what? No business is going to stay solvent if everybody as an individual doesn't have money to spend.
Hosuk, you've already mentioned the possibility of civil disorder in China. Is there a problem as well with supply chains and people getting supplies of basic things around the world now?
Well, actually, my local supermarket actually was completely sold out. There was actually not a single item left. And actually, the first item...
Also, just to interrupt you, that one assumes that's because people are stockpiling things. It's not that things aren't getting to the supermarket in the first place.
Indeed, that's true. And for the sake of levity, I should mention that the first item that was sold out was actually the Corona beer. So there seemed to be nothing wrong with the Belgian sense of humor. But no, it is indeed true that we are waiting for the supplies, and people are really starting to realize the scale of this. But just to reiterate some of the points that were mentioned around the other markets, is that Europe is really not resilient, and especially not SMEs. And if you look at the numbers in terms of resilience of the German SMEs, which is extremely important for the overall growth of Europe, they can actually withstand about 2 to 3 weeks of disruptions before they start to go under. So in that sense, we are extremely vulnerable. And as we know now, we are a services-driven economy, and the services is the first one to come to a stop in a situation like this. So yes, indeed, we are really exposed.
OK, I want to quickly go round to each of you. Quick answers, though. What is your key recommendation, Pedro, to policymakers right now, whether they be central bankers or government? What do they need to do right now?
Absolutely. I think what we need is a massive fiscal stimulus from all of the parties involved. UK, Germany seems to be coming around to it. But this fiscal stimulus needs to have an also massive public health component to it. Because as I mentioned earlier, I think the biggest sort of public crisis facing the United States in the next 2 months is going to be a lack of hospital beds and the lack of sort of social infrastructure for people to continue living their lives, children who need lunches from schools. And so you need a fiscal stimulus that addresses all of those issues and basically puts a floor under people's fears so that we can get
your recommendations quickly, Hosuk, of what policymakers should do. Top thing they should do.
The focus should be on helping people, not the structured economy at this stage. We are really very much in damage control phase, which essentially means that, well, disease prevention comes first. Collect the data and act on that data.
Gareth, you get the last word in this discussion. What do you think is the key priority at this very moment for policymakers?
It's preventing a health and economic crisis from becoming a financial one, because then the effects will snowball and become much more significant.
And do you think a global recession now is inevitable?
I think a very sharp slowdown in global growth is inevitable, but provided the virus is eventually contained, then things should recover quite quickly.
OK, well, it's certainly going to be a very tough few months for everyone. Thank you to all of you. Pedro da Costa in Washington, Hosuk Lee Makiyama in Brussels, and Gareth Leather here in the studio in London with me. If we didn't have enough to worry about the state of the global economy, well, certainly it's in a state. You can catch this programme every day on the television on Al Jazeera, but you can also always find and watch it online at aljazeera.com. What did you think about all this? Join our conversation on Facebook. Your thoughts, comments and other contributions also welcome on Twitter. Our team in Doha and London, thank you for watching. I'll see you again here soon.